0000. Well, today, the first Tuesday of the month, and that means the RBA is sitting, the Reserve Bank of Australia. They're considering the cash rate. The feeling is being prepared for another rise. Is that likely to be the case? Joining me now is Mark Bevan, the founder and director of Joust. Mark, good morning to you.
Yeah, good morning, Graham.
Should we be afraid, very afraid?
Oh, I think so. At Joust, we're forecasting, along with most others, that the Reserve Bank will raise rates again by another 0.25% this afternoon.
And that will take it to what, over 3%?
The cash rate will be 3.1, which will be the eighth rise in a row, and the highest it's been for 10 years. Fortunately, is one way of looking at it, but there's no meeting in January at the Reserve Bank, so we might get something of a bit of a relief there. But our view is it'll probably be another 0.25%, possibly at the February meeting.
So this isn't the end of it?
No, and I think that's the important thing, Graham, for your listeners is the cumulative effect of these what are likely to be 8 consecutive rises. That's what's really hurting people in the hip pocket when they're making their mortgage repayment. And
this is the thing, isn't it? A lot of people took out the mortgage when it was 1% or less, and being told effectively that it'll stay that way till about 2024, and now they're really feeling the pain.
Yes, the RBA's copped a bit of criticism for being so strong in its forecasting going back a year and a half or so. At Joust we had customers getting variable home loan rates of 1.9% just 12 months ago. So now anything around about the 5% mark is pretty competitive. So it's a huge increase, and a lot of people took on very sizable debt to get into the home market.
So this 0.25% cash rate hike, what's that going to mean to an average loan in South Australia?
Yeah, look, the average loan size sort of across Australia is about $500,000. Obviously, it can be higher in Sydney and Melbourne, but what we're really talking about cumulatively is a 3% rise. And if your mortgage is $500,000, that's $15,000 a year that you've got to find, just for your mortgage repayment. Which equates to about $1,200 a month. Not easy to find for the average household.
What would you advise to people who are starting to feel the pinch?
Well, look, definitely to shop around. Joust tries to create a situation where we can generate as much competition for your home loan as possible. And probably you've got to look at things like, no frills, and make sure that there's sort of, you're not paying unnecessarily high rates, just for the benefit of potentially, frills and extras that you possibly don't need.
What's the situation these days with fixed loans and variable loans and a mix of the two? Are they still available?
Yes, you can definitely get a combination, and that's not a bad way to go for people that aren't too sure. Fixed rates at the moment are higher than the variable rate. So us humans by nature, we generally try to make things as easy as possible on ourselves. So what we're seeing is a strong tendency towards variable rates, which are slightly lower than fixed rates at the moment. Whereas 12 months ago, we saw quite a few people locking in for a year or two because fixed rates for a brief time were lower than variable rates.
We know the continual rise in the interest rate is to sort of offset inflation. Do you think it's having an impact?
Oh, yes, I think so, Graham. The Reserve Bank would have been pleased to see a tiny drop in retail spending in October. That was a fairly important statistic. But look, I think, as well as mortgage rates going up, that has a flow-on effect also to rent generally. People that have got investment properties, their mortgages are going up, so they're looking to increase rent. So, whether you're a homeowner or a renter, you're feeling it in the hip pocket, and it simply has to mean that you're going to have to cut back in some areas.
Yeah, I know there's not many ways to control inflation, and the government or the Reserve Bank is doing what it thinks best. But you put the interest rates up tomorrow, effectively. there must be a lag. It just doesn't happen overnight that there is any reaction to that, is it?
Oh, you're quite right, Graham. And importantly, even with home loan rates, the banks are usually pretty quick to pass on the increase, and we'd expect that to happen in the coming days. But then they've got to sort of take stock. They've got to assess what the new repayment needs to be. Then they need to write to each home loan customer to advise them of what the new repayment will be and when that'll start. So I would suggest that for a lot of home loan customers, we're probably only dealing with the rate rises from September and October. As you say, there'll be more of a lag for these last couple of interest rate rises, which will continue to have a subduing effect on spending, we expect, which will hopefully deliver the result that the RBA and the government are looking for to make sure that inflation is tamed, so to speak.
So the final word today is that we can expect another increase.
Yeah, that's what we think. It's likely to be another 0.25%.
Good on you. Thanks for that, Mark. That's Mark Bevan, founder and director of Joust. And that would take the interest rate to 3.1% from the historically low levels of just 8 months ago.